Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Monday, June the 25th, 2018. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypotheses for the day. We do create multiple hypotheses in order to have a plan in place. We do not know what the market's going to do, therefore we create plans based on who takes control and then execute the plan that best suits the market. This is going to take about 20 to 25 minutes, so if you're watching the video and just want to see the hypotheses, you can skip ahead. They're usually about 15 to 17 minutes in. I feel it's important to give the context prior to the hypos so you understand how I'm coming to my conclusions and to those hypotheses. Let's take a look at last week on Friday. Friday we opened up in this thin area. One of my main hypotheses for the day was that we'd spend a lot of time in this B-shaped profile, the thin section, as we auction that off. And we're looking for an inside day, and that's exactly what we got. We basically just chopped sideways most of the day around the 64, and we had a bit of a sell-off liquidation into the close as the MOC was heavily involved. You can see that the OTF was very involved. But as soon as they stepped out, what do? We rotate right back up and go sideways into the close. On the on the Globex, sorry, my throat has just not been good lately. On the Globex, we gapped down. In the Sunday Globex Open, rotated back up, but failed to get above the close. And then basically they've been slowly selling this off, and we've come down. And very important that we've broken inside of the value area of the longer time frame microcomposite value area, and we're going to talk about that and what that means in just a minute. We've got 100% net short in time and volume for overnight. We do have almost 2 times the average volume, so we do, as I've been mentioning before, we have been seeing OTF being involved in the Globex, and that's usually when we're about to make a move out of balance. And you can see that we broke down overnight, and we've come down and tested a prior balance area. So taking a look at the news. Today we've got 8:30. We had Chicago Fed national activity, came out a little bit less than expected, but the new one today, the big one I should say, is going to be the new home sales coming up at 10 o'clock. We've got Dallas Fed Manufacturing Business Index at 10:30, and then at 11:30 we've got the 3-month and 6-month auction. Not much scheduled. Everything right now is being driven by the tariff war that's heating up and leading up into that July 6th, where most of the tariffs are going to come in to play. So each morning I like to start with a very simple candlestick chart. I'm probably going to lose a few of you because people think it's rudimentary, but I don't. It's very important that I take a look at where we are in terms of the larger time frames. I use a 9 EMA, 20 SMA. What I'm looking for is strength of the trend through slope and separation. Is price paralleling the 9 nicely? Are we coming down and challenging the 9 and the trend, or are we breaking the 9 and the 20 and possibly getting a new time frame? I start on a monthly. You can see that we had 14 months of one-time framing. In February, we violated the one-time framing up. We came down, and for 4 months we battled the 9 EMA, and then they took it back in May and June, and we've got continuation of the trend. We do not challenge the trend on the monthly until we get back into the mid 2600s. So any pullback right now, especially this pullback of what we're likely to see back down to the 2722 area, is just coming back into balance again and picking up late buyers and auctioning lower to those buyers. On the weekly, you can see that we flattened out and we're going into this consolidation. Again, we're testing the 9 EMA on the weekly, and again, we're sitting right on top right now of that key line in the sand, the 27.45.75 area. Going to the daily, you can see that we have broken below the 9 and the 20, and we're getting a possibility of a trend change down in this time period. So we are seeing some weakness. You want to pay attention to the 2760 area. If we can get back up there, then we're coming back into the balance that we've been creating above the prior microcomposite value, and possibly getting a continuation up back towards that 2700 or 2800. I mean, going to the intraday, you can see that we've had this downward trend in the Globex, and it's got good slope, got good separation, so we're likely to come down and test the low that we put in overnight. Our low overnight is 39.25. Going to the 30-minute, you see that we are balancing out. We had good slope and separation, and we're trying to take this trend back, and you can see we're back right into this consolidation zone here in the 27.47 area, and if we can get above that, then the next area I'd be looking to get back up into is this 56.50 and take out the possibly take out the or test the low of the prior day on Friday at 27.55.25. So let's take a look at it in the structure of the market. Again, just to give you a little bit of context, we're in this balance area for quite some time, tested below, tested above, failed off of the 2800 twice, and then we came back down, and the microcomposite VPOC was down here at the 69 area in the June contract, adjusted up to the 72. But the VPOC shifted up into the 27.22 area. The shorter time frame also confirmed it shifted up, and then we get the breakout above the prior day or prior value area high, and we balance for 2 days, accept that price above value, get the continuation, move up, and then the sellers stepped in at 92 area in this HVN right here and pushed us back down, and we came right down to test back at that value that we accepted above the breakout, and then we tried to rotate back up, and the VPOC shifted down from the 88 down to the 76, and then on Friday we just saw some weakness, and then in the overnight we've broken below. So we're currently trading right on top of this. This is a very, very key level that we need to hold. If we cannot hold it today and start to move back up, we're likely to start making a move back down towards this 22 area. And again, it wouldn't mean, in the bigger picture, it's not going to mean a lot, but we're trading in a shorter time frame, so we have to take a look. So our key line in the sand is right where we're trading. I'm not going to shift it lower. You could say it's an over-under line, but it is a very major number, so we leave it as our key line in the sand. Below it, look for a test of the overnight low at 39.25. The next key level below that puts us into the value area of the shorter time frame, our value area high from this consolidation just before the breakout was right here at the 39.25. Below that, 32.50 and then 28.75. But anything below 28.75, I think you got a really decent trade down to this 22. And then if the 22 doesn't hold, look for them to keep coming down through to the 27.09.75. Our month open is 27.11.25. So if we don't hold the 22, they're likely to come down and test the open of the month and then peak below it, and I'd be looking for a move down into the 10 and the 9 area. Anything below the 2702, I think we dip back into the 2600s. So key levels to pay attention to here today is the 45.50, the 39.25 overnight low, and microcomposite value area high for the shorter time frame, 32, 28.75, and 22. And then the month open at the 11.25. Above us, 55.75, the 4-day microcomposite VPOC, also the low, just above the low from Friday, which was 27.55.25. If we can come up and accept this price, look for them to push through back up to the other side of this balance and to the prior microcomposite VPOC up at the 2760, and anything in the 2760, if we can hold that, then I'd be looking for a bigger move up back towards that 7650. So taking a look at our overnight session and moving our numbers over. We've got a B-shaped profile. The VPOC is shifted down to the 45.75 as we test this this key line in the sand. That's also going to be the overnight VPOC 45.75. We've got the prior range high at 47, and basically we're going to be opening up outside of range, outside of value, at a very key level. I don't know where we're going to open, but just to give an approximation, we're trading at 46. If we open at 46 and our close was 59.50, our half gap back is going to be 52.75. We have to assume that we're going to be opening up, critical mass is not important there. We're going to be opening up with a fairly large gap. We do have the naked VPOC and the naked close up here in the 53 and 52.75 area with the half gap fill. If we do not close the gap, okay, and we get 2 hours into the session, the likelihood of that gap closing is going to decrease substantially, and we could get a bigger move and some capitulation. Our overnight high is up at 58. Our overnight low is down at 39.25. So based on the daily ATR, our 20-period average 2 range full session is running at 26.75. So the upside daily ATR target is up here at 66, and the downside daily ATR is down here at 31.25. Currently, right now, we have 13.75 points of range. I think we're going to take out the overnight low, regardless of what happens. So watch this 45.75. Use it as a over/under key line in the sand, whatever you want to call it. But above it, look for the half gap fill. So in terms of hypotheses, my main hypo is an open auction out of range. I'm looking for a wide opening swing based on where we're trading as we fight this key line in the sand, but I'm looking for responsive buying up into the 52, 53 area, possibly even try to test the range low from Friday, but somewhere between the 55 and the 52 area, I'm looking for initiative sellers to step in, rotate us down through the overnight low and come down here and test down into the 36.25, maybe a late day probe down into 31. And then I'm looking for us to base and just chop between the 32 and the 45 area as we come back and test that gap area of the breakout of the microcomposite value area, and basically chop in that area. Hypo 2 is going to be a open auction out of range, a push down into the 36 area. And I'm looking for buyers to step in, rotate us up into the 53, and then push up into the 55 and fight the low of the prior day with a late day probe to take out the overnight high and close the gap. But basically chopping between the 60 and the 52 area once we get up there. That is hypo 2. Hypo 3 is a gap and go, a open auction or an open drive, but failure to come up to the 53 area. Sellers take control early, push us down into the overnight low and this 36 chop here, and then fail, push through the daily ATR and come down back into balance at this 22, and then fight the 22 and start to work our way back up into the 36 area, but closing somewhere between the 22, did I say 32? I meant 22 and the 36 area, and come back down and close back inside of this longer time frame, okay, value area down here, and close in this distribution zone right here, and then fight this for today and tomorrow. That is hypo 3. Hypo 4 is a take back day, open rejection reverse, push down through to the 39, leave the 37 gap alone. Buyers step in early, rotate us up into the 53 to 55, fight this level, push back up to test and close the gap, and then take a trip through the value area and come back up into the 64 area and chop in here with maybe a late day probe up into the 71 and a quarter. Based on the context of the market, this has got lower probability, but this is also, an area, the 31 area has been an area that they've bounced off of and had strong pushes up. So we might get a higher low here, and they take it up here from the 39 to 40 area. So there is a fifth hypothesis, and that is basically a tight range, basically a 10-point range, and we basically chop between the 45 and the 55 level and just go sideways as we fight the key line in the sand at 45.75 and the prior day low on Friday. So that's my main hypotheses for the ES. Taking a look at the gold. Gold has gapped down again. Like I said, I'm seeing weakness coming in on gold, and right now, we're trading down here in the 71. Hold on one second. So we're just we're below the key composite VPOC at 95.90. This is the most traded price going all the way back to 2008, and we did not hold the 1300s as we came down and tried to bounce off that 95.90. Now it's likely that we're going to push lower and looking for a move down into this 65 to 59 area for the next possible bounce. So key levels to pay attention here is the 69, and if we can hold that 69 where we're trading right now and move back up into the 76, 72 to 76 would be a safe probability. And if we get above this 79, a push back up into the 83 level is what I'd be anticipating. If we don't hold the 69, it's the 65 and the 59 that will come next. And if we don't start finding some buyers down here, I wouldn't be surprised if we come all the way down here to the next big level below us, down at the 1243, 1244 level. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.